All right, so now what we're going to do, I'm giving you a little extra peek right there, is we're going to look at the stock market. We're going to do it a little bit differently than we have before. I'm going to give you that intermediate view of the S&P 500, and then I'm going to review a little bit of our stock index report, short-term analysis, give you an idea what that has been saying and what it is saying right now for the stock market on the short-term basis. So a lot of information that I'm going to share with you right now. This is the S&P 500 looking at the SPX weekly chart. So what we're looking at here is cycle analysis. There are 3 cycles represented on here. These arcs are the ideal cycles, and that is what if there was a consistently normal fluctuation in money flows, then it would trade in this ideal fashion where you would get advances and declines. This is the dominant, this is the minor, and there is a major cycle way up over here which points to a much weaker market condition coming out into 22, which is something that I have discussed. So let's just look at these cycles that are right in here, and you can see that the length of these cycles as they're set up, if I just highlight this is 22 weeks and this is 11 weeks, and there's a minor cycle in there at 11 weeks that you can see, and there's a dominant cycle in here at 22 weeks. These yellow ovals are corrective phases, and these are where the cycles nest on the bottom. And what they tell you is periods where there are likely to be significant corrections. However, since this period back in March of 20, at the bottom of the pandemic, the market has been in a steady upward march. These are positively configured and what we call positively translated cycles. There are 3 of them, and now we are in the 4th one right over here of each of these harmonic families that you see. So I'm just going to look at these last 2 cycles right over here so you can get an idea of where we are. Well, right now you can see this is the most explosive period in any of these cycles that we have seen. It keeps moving up through target areas, resistance areas, and now has moved slightly through this confluence of fib extensions that come off of the last 1, 2, 3 minor cycles that are in there. This would be an area that we would expect it would begin to have trouble, and you can see it's already trying to move through there. We'll see if it can hold up there in the next couple days, or it does start to return to the downside. Short-term indicators are suggestive of only a minor pullback coming and then moving again to new highs. So this is an area that it is likely to get through. The period of risk is mid-November through December right in here, and that takes you right towards the end of the year. That's that next oval, and we would expect that it would have some pullbacks. That's counter to what most people would believe regarding seasonality, that you get the Christmas rallies and then the markets hold up. We kind of think this is that Christmas rally right now in what is a just massive move to the upside in just 6 weeks, as it makes a low here of about 42.78 and gets up here to 47.18 intraday. So that's 400 plus points that it's moved in just these 6 weeks, which is a monstrous upside move. And as far as short-term overbought conditions, it is at an extreme overbought condition right now. And those of you that are members can see on the Russell, it is giving a what we call a market condition indicator, an option bias indicator, orange, which is as extended as it gets, and warning that there is likely to be some pullback coming fairly soon. So this is still immensely strong. This is the reversal scout. It turned positive right here, and then we got that explosion that confirmed this 11-week low right there. The 11-week low broke this 78.6%. That made it only a small probability, less than 1 in 3, that it would achieve a new high, but that does happen 1 in 3 times, and this shows you the immense strength in the stock market. So we're looking for some waffling to begin in here, and then sometime later in November and into December, some type of a larger correction in the market. So that is the intermediate view of the market. Again, go to askSlim.com if you want to learn cycle analysis, and go to the workshop tab, and you can see a lot of information about that there. So that's the intermediate view. Still shows you the immense strength in the market and this condition where momentum is so strong that it is pulling the market to the upside. Now let's talk a little bit about our stock index report and our shorter term view that we share with our level 2, 3, and 4 members. This is from a week ago, Thursday the 28th. And what you're looking at here is our technical evidence comparison. Now this, you get this every single day with so much more in our stock index report snapshot. And what we're looking at is trend conditions and momentum conditions for the S&P 500, NASDAQ, and the Russell. So a week ago, you could see it was basically all bullish when you look at that. There was intermediate and longer term trends for the Russell were still neutral, but it had turned up and the short term conditions were very positive. That was 1 week ago on Thursday. This is also 1 week ago on Thursday when we're looking at the trend and momentum technical evidence as of last Thursday on the 28th, and this gives you the short term and the near term and the dates that these turned upward. So you can see when they turned bullish in here for the trend and for the near term conditions. This has been bullish for intraday conditions since the 15th of October that you can see, and there's the dates in there, and these all been very positive. So this is what we reported to our members a week ago, and of course they've gotten updates on this every day. So where are we right now? This is as of Thursday's close, and you can see it's identical. It talked about how strong conditions were, and it remains in those strong conditions. And this is as of yesterday, the same thing. The very, very strong conditions, and you can see in there the dates when they became positive or bullish based on this. So incredibly strong conditions that we've seen, and our indicators have been speaking to that. No matter what I've said along the way about any topping or extreme conditions, this is what we really rely on for trading purposes, looking at these conditions and saying, well, you can't be very short when you have these conditions that say the market is still so strong, and that is what's going on right now. This is our 2-hour area charts comparisons. This is the slim ribbon, and our market condition indicator, our MCI. And what this shows you are the extreme bullish conditions for the S&P 500, the NASDAQ, and the Russell. You can see in here where the Russell was weaker, and then when it began to turn strong, and actually got stronger. And now this is our market condition indicator, and they are at 100. Now this does not represent an overbought or oversold condition. This just simply represents an extreme period of strength, and that's another indicator that says things are really strong. Every single day, Matt puts out a technical overview of the S&P 500, the NASDAQ, and the Russell with all of the important conditions, all of the important levels. And this is just an example of the one that he posted yesterday, just to show you that what it says in here: short-term directional bias and technical briefing. And all of this suggests the S&P current short-term directional bias remains bullish. So just wanted to share that with you. These are the short-term type things and important information that you're going to get. The SIR Daily Snapshot, it's designed for short-term index trading, for swing traders, for intraday traders. It includes technical insights into the S&P 500 with the SPX, the SPY, the NASDAQ, and the Russell, and more than 10 different proprietary charts, 2-hour, weekly, daily charts for each of the indexes. You get our short-term directional bias, our trend and momentum conditions, and key support and resistance levels, and our projected price targets. You can get this with a level 2, 3, or 4 membership. You start out in level 2, you're going to get the stock index report. You're going to get our stock index live stream, our SIR live stream, which is live charts. You don't need a special platform. It's got the intraday charts with our reversal scout on there, the important support, resistance levels, and the acceleration zones where you can catch the bigger trades. You'll get our weekly stock index report, our weekly ETF review, the Slimulator momentum tracker with over 1,000 stocks in there with momentum conditions and our proprietary algorithms, and our whole video library, 500 plus videos in 10 categories. All of that is in level 2. So if you want to get this stock index report with all this daily information and all of this, just sign up for level 2 at askSlim.com. You have any questions? Write to Matt at askSlim.com.